Welcome back, my awesome people. Today, I am honored to be here with Robert Indries, the managing partner of Elkridge Advisors. Now, I've had Elkridge Advisors on this channel before, and it was such a great conversation that I wanted to have the second partner on board as well. So, a little bit about Robert. So, he has generated over $500 million for clients by scaling and successfully selling more than 200 businesses across 19 sectors. And he has a 100% sale success rate. And with 4 exits and operations in 17 different countries. Now, if you enjoyed that first interview, you are definitely going to love this one. So let's just get right into it. Robert, thank you for being here with me today. How are you doing?
Thank you so much, Jacob. Your energy is very contagious, I must say.
I do try my best. Sometimes these financial channels, financial interviews can be kind of a,
Yeah.
monotone style. So I like to
Yeah.
bring some life to it. So let's just get right into it. So Robert, let's start at the beginning. What drew you into the world of, finance, investing, mergers and acquisitions, selling businesses, and how did you get involved with Elkridge Advisors?
So I realized a few years ago that I tend to be very, very good at the process of either selling or buying companies because we are so intimately involved in scaling them to begin with. And so I can very easily determine the actual value of a company, well, in a few conversations, looking at a few numbers. And I've realized from conversations with companies wanting to buy my businesses in the past that they have basically skipped many items that should have given them the actual value of those entities. And they didn't understand, like they didn't know to ask the questions in the first place. And then secondly, even if they would ask the questions, their conclusions would be off. And so I realized that most of the people within this industry are not actual battle tested entrepreneurs. They're people from the banking sector, or people that have a business degree or something, and they've hopped into M&A or something like that. But it's literally, you can see the difference. You can so clearly see the difference between someone that has literally proven themselves as an entrepreneur and made 7 or 8 figures in business, building their own businesses, and someone that's just has the experience of M&A, right? Transacting companies. One literally is so much more aware and self-aware of themselves and how business should be run and how they would run a business, and then aware of how businesses run in general so that they can determine value from others. So I just saw this huge gap and I said, okay, this people have no idea what they're talking about, most of them. At in one case I was offered, for example, from one of my companies, 2.5x multiple, and like 2.5x you give to someone that has a very unhealthy business. We are like that doesn't really, almost is not worth buying, right? I'm industry best and I can prove it with all of the metrics, right, that my industry has to offer. And lo and behold, I sold a company for 4.5x, half a year later, right, to someone that actually understood the industry. So that's basically how I crawled into the sector, and I joined Elkridge at Patrick's invitation. We've been friends for many years, and at one point, he said, "Robert, I have M&A experience and business experience and so on, and you have experience managing, scaling, operating businesses. Let's join forces and let's build Elkridge together." And I loved it. I always liked Patrick. Every time I spoke to him, he always has given me very good vibes. So I said, okay, let's do it. And I have not regretted the decision.
That 2.5x was kind of like a slap in the face, right? Like you're like
Mm.
thinking, why am I going to sell it for that much or even entertain that offer? And so it's always good to, when you're building a business or getting into a new business, where you're able to have people around you that obviously are really good at what they do, but also are encouraging and motivating. And so I'm glad that you and Patrick, met up and started Elkridge. And so can you tell us more about how you helped generate over $500 million in exits? Because
Yeah.
Exiting a business, selling a business, everybody thinks, oh, I can, run this for 5 years. I can easily sell it. But there is a
Mhm.
difference between selling your business for, 2.5x and 4.5x. So can you tell us
Correct.
about that?
Yeah, sure. So in terms of exits, we've helped people exit around, let's say, 300 to 400 million in exits. The 500 million is business value created. So some people, after we help grow and scale their businesses, they don't want to sell anymore because it's just making them, a million or maybe 2, 4, 5 million a year. And they're like, oh, I'm very fine. I'm very comfortable. Let's just keep this floating, and they don't want to sell the $1 million company for 3, 4 million. If they get a good offer, right, if they get 5, 6 million, 5 or 6 years worth of EBITDA in advance, okay, maybe they'll consider it. But at the point of almost certainty that you're going to get that money without doing anything, you as the owner, you're way less likely to actually sell it. So a business that can command, 5 or 6x multiple is a business that operates fully without the owner. And so that is how we have generated that, let's say that business value. We go into business, let's say right now it's doing 500,000 a year, right, in EBITDA, right? Maybe it's at 5 million a year in top line, 500,000 in EBITDA, so 10% margin after all costs, including salaries, etc. And then after we go in, we start working with the business. We implement better IT, we implement better operations, better HR, better marketing, better sales. We then take that business from 5 million with a 10% margin to maybe 6 or 7 million with a 20% margin. All of a sudden, instead of looking at the $5 million business with 500,000 in EBITDA, you're looking at the $6.5 million business, right, with 1.2 million EBITDA. The second, the first would maybe worth 1.5 million. It had owner dependence. It was small, under 1 million, etc. So the multiple is lessened. However, when you're at 1.2 million completely without the owner, all of a sudden you're looking at maybe a $6 to $7 million exit. So we've basically generated around $5 million in business value, right? Just from that. So we've done that over and over and over again many times. And so that's how we passed, 500 million basically in business value generated.
I mean, that is pretty much like an easy formula, right? It's just kind of like rinse, repeat. Because I think when it comes
Yes.
to a lot of people who own businesses or entrepreneurs, they're, even though they want to sell, they want to exit, sometimes they don't even know where to start to even begin that selling process. So, what makes a business truly sellable? Like, how can
Mhm.
founders increase their company's valuation before they
Mhm.
end up selling? Because I think at the end of the day, if you hit all those metrics, you're probably going to get a better price rather than your paperwork is all over the place.
Yeah. So I think the best things that grow the value of a business, a few of these. So number one, removing any and all key person dependence, right? If the business is dependent, if the success or even survival of the business is dependent on any one individual or multiple individuals within key roles, then that presumes a lot of risk. If it's dependent on the owner, that's the highest amount of risk and will reduce your multiple significantly. Second is recurring revenue. So compare one-time revenue to recurring revenue. Recurring revenue almost always demands an additional multiple, right? So if for a project-based company, let's say you would get the 2.5x, if it's recurring revenue, you almost immediately go to 3.5 just because of that, right? Like you increase by that multiple. And then the third one would be systems. How many systems do you have in place that predictably give you the exact same outcome every time? Like a McDonald's, like a Starbucks, like anything you can think of as a metaphor for can I put in a 16-year-old into the system and it will operate with the same level of certainty as I would put in, a 10-year-old or someone with 10 years experience within the role, right? And these systems matter. The moment you have them and you can prove that you have them. The company I gave as an example earlier that I sold for 4.5x had over 300 SOPs across 8 different business areas, right? You can easily sell that, right? It's like a business in a box. Like there you go, right? It's gift wrapped, it's perfect. Just take it, right? And you need to do almost nothing once you purchase it. That's how you know that it's good for sale. And this is what owners should do. And as you said, most of them have no idea how to get there. That's typically why they work with someone like us or anyone else that knows what they're doing, to put in place everything that's required to get the additional multiples.
No, it totally makes sense because if the founder or the owner is pretty much everything, you're pretty much relying and putting your eggs all in one basket. So I think it is absolutely correct where you have to develop systems where even a 16-year-old, you hire that person and they can execute the plan consistently and easily as well. And so, to your point, if I had my business right now, I'm thinking about selling. One, how early should I start planning and getting things together to sell? And two, if I contact you, what will be the first few things that Elkridge will do, not only to prepare me to sell, but maybe give me some really good advice to build my business up?
Yeah. So I always go back to that ancient Chinese proverb that says the best time to plant a tree was 20 years ago. The second best time is right now. So basically, there's an optimal path, and then there's this is reality, and let's just go path, right? So the optimal path is as soon as you incorporate, right? So literally from day one, build it to scale, build it to sell, even if you have no intention of selling. That is how you should build a business from the very first time you start it. If you do not build it that way, you will find that more often than not, you will have to make compromises. I just talked to an owner, a lady that has a business within the wellness space, and she she was involved with me during onboarding, during the conversations, what when I was there at my first session, etc. And you know, she was saying that, oh no, I'm the business operates without me, and so I'm like, what are you talking about? You answered the phone when I called. You onboarded me. You told me like literally you were part of this, part of everything. Well, yeah, but my team could have done that. Okay, they could have, but they're not doing it. There's a very big difference, right? And so I told them that to remove themselves is something that they should do and practice as early as they can. Because if they do not, they don't actually know. They don't have actual data that the business functions properly without them and consistently, even if they have employee churn, which is like fundamentally the most important thing. If an employee churns, you hire another 20-something-year-old into this position, will they be able to have the calls, answer the questions, onboard someone, get them to upsell, cross sell, whatever that may be? And so, again, the best time to start doing that is right now, right? So, wherever you are in the stage of the business, what Elkridge does at the beginning, we have sort of like um, we have two basic ways. Like the first one is a commitment where we go all in and we do all of the work for you. Like we make sure that everything is in place, all of the systems, all of the IT, all of the marketing. We literally create the funnels. We literally put in the salespeople. We literally, hire the AI, sorry, the EAs, the VAs, etc. Like everyone that is required to do the day to day, the nitty gritty. Or another, let's say, lower commitment is where we do what we call an operational deep dive, right? We look into everything and we have, checklists of over 200 items that we go through. And then we basically tell you everything that is right now a reality within your business, whether you like to believe it or not. And then we say, hey, here's, the low hanging fruit. Here's what you should work on right now, right? What you can do to improve. So those are the two options. In reality, no one wants to do it themselves. Everyone wants us to do it for them. So that's the only package we actually sell.
Well, and I think that's a great package because it's pretty much like a one-stop shop. You know, you just contact Elkridge, hey, this is my business, here's my information, my documentation, and then from there, you kind of pick up all the things that they're missing, you add it, you create it, you build it, and I think that is something that a lot of businesses are stuck with, right? A lot of businesses do want to sell, but they're like, well, my business is kind of a mess right now. I don't have my tax from 5 years ago. I don't have this. I don't have this. And you're absolutely correct about the employee and the management or the founder relationship, where the founder has to leave sometimes and just let the system kind of play themselves out, or else they won't know for sure. They might assume, thinking, "Oh, don't worry, I'll leave and things will, pick it up for themselves." But no, that's actually so cool to hear, and it reminds me of Chef Ramsay's, Gordon Ramsay's Kitchen Nightmares. Whenever you watch that show and it's just a disaster, he comes in, makes it amazing. Their revenue goes up. They're able to scale and grow. And to that point, what financial metrics do buyers actually look for, and who are these buyers? Are these buyers, average people like myself, or are they institutions, or who are they?
So, average buyers care mostly about getting a return on investment. That's it. That's if you can guarantee that the buyer will get an ROI, you're done. That's the entire thing revolves around that.
That's the
You're
end
asking me
goal.
for
Yeah.
six, yeah, yeah. You're asking me for $6 million. In how much time am I going to get my money back? That's it. That's the question I'm asked because only after that do I start getting value. Because it's so easy for a seller to think, well, I should get the 5x. Do you understand mentally that the 5x of a yearly multiple means 5 years the buyer needs to wait to start getting an ROI? Actually, six if you take inflation. They need to wait 6 years of the business making money every year, and only in year seven will they start making money. Why would I give you that money? It doesn't make any sense. Like, I'm not, it's just the risk is too high. So that's why typically you don't see 5 or 6x multiples. You see them in very established businesses that are multiple seven figures in EBITDA and so on. You see multiples typically around 3x because that's like, I'm willing to digest waiting for 3 years, right? It's like I can swallow it, right? Like I can swallow, okay, you're making 1 million right now. I'll give you 3 million. And then I will wait, me as the buyer, will wait for 3 years. And in year four, start making some money. Most people, can swallow that pill.
Because it's not too
So that's the
far
average
off.
buyer.
Yeah, it's not too
Exactly.
far off.
Yeah, exactly. So it's not too far off. So that's why, that can work. The average buyer. So M&A has been historically reserved for very large players, right? Operating in the hundreds of millions or billions. That's the only thing you would hear about decades ago, right? Apple acquired Disney, and then whomever else acquired these guys, and whomever like Amazon acquired MGM Studios, blah blah. These are the only things you would hear about. So it was always big deals. It was always big money, corporate money, either M&As between large entities, one studio buying another or merging with another, or family offices or Ps and so on and so forth. However, as companies like Elkridge started to pop up, we are unique in the sense that we help almost any individual that has 6 to 7 figures in net worth. We help them get into this game and start buying companies and start building their net worth and their passive income. That's why we say any person that joins our investment group, basically they have a very significant chance of doubling their net worth every year, right? Because that's just what we do for them. We just keep acquiring companies and we give them a lot of passive income, which then gets reinvested into more acquisitions and so on. So that's basically the structure that we have. However, the average buyer is going down in terms of how much money they have. At the same time, because this is a market reality, lenders are also adapting to that. So now you have what in the US we call SBA loans, right? So an SBA loan basically means that if you do everything correctly, and we've We have 100% success rate with SBA loans, right? So if you do everything correctly, you can buy a $5 million business, $5 million, right? That one that's worth $5 million. You can buy that for literally 250 grand. That's it, of your own money. You put down 250 and you own a $5 million entity, right? And we find the deal for you. We do the SBA loan and the package, because like it's an entire lender package that we need to prepare. And then post acquisition, we manage all of the business for you. You do nothing. You just put in your 250,000 or 3, 4, 500 grand. Again, depends on how big the company is. And then we purchase the company. So now buyers are everyone that has about a million, let's say, in average in net worth, can buy another entity or another company within your industry. So let's say you are a manufacturing plant, you're doing 5 million a year. You can literally be purchased by another manufacturing plant doing 20 million a year, right? And so Patrick, my partner, my co-partner, has a lot of experience in that. That is actually how he started his M&A journey 17 years ago. His clients were asking him to acquire businesses for them. So hopefully that answers your question. So it goes from institutional investors, very, very high up, hundreds of millions, billions, and then it goes down up until people that have a million in net worth that can deploy that capital to start buying passive income generating assets.
No, thank you for that process and those details because when you're acquiring another company, you already have to be kind of self-sufficient yourself, right? You're not going to buy a company when you're already kind of struggling. You gotta get your shit straight before you start going and buying things, right? So it definitely makes sense. And so I know a lot of companies and businesses, they have scalability and growth kind of mixed up sometimes. What's the difference between growing a company and scaling while growing a company? There's always a intertwining of words when it comes to those.
Very, very good point. I'm so happy you asked that. So, scaling a company um, removes operational bottlenecks. Growing a company removes sales or revenue generation bottlenecks. So every company has bottlenecks. Otherwise, it would be $1 trillion company, right? If it wouldn't have any bottlenecks, it would just grow infinitely. It just, and it will 10x every year, 10x every year, 10x, and you only need to 10x a few times to be $1 trillion company, right? However, there are bottlenecks. And so the typical two that you see is revenue generation bottlenecks. I don't have enough leads, or I don't have enough conversion rate, or the cost per lead is too high, or whatever bottlenecks I have, or operational bottlenecks, right? If I get too many clients, I have an issue rendering service or products at a high enough quality, right? If too many people ask for refunds, I have an issue with my profit margin. It slips below, and then I need to go into debt, right? I have issue during high volume situations where, let's say, it's either Valentine's, or it's a Black Friday or something, some event within my industry, my sector. That means that I have an inventory problem. I need to put in 1, 2, 3 million in inventory and pray I'm actually going to sell it. Because if I don't sell it this year, I need to sell it at 50% off because it's already last year's attire or whatever style, trend and so on. So these are the two types of bottlenecks. So scalability tackles operational bottlenecks, right? Whatever operationally is an issue, we fix. We make sure that no matter how much we grow, this will not be a problem, right? So that's what we fix on the operational side. And on the growth side, we say, okay, what funnels do we need to put in place so we can self-sustainably, that's the key word here, self-sustainably, right? I put in 10 grand, I make 100. I put in 20 grand, I make 200, right? I put in a million, I make 20 million, right? And so this is what we help our clients do. And those are not made up numbers, by the way. Our clients, on average, get between a 10 to 20x return on ad spend, right? So we have a client, for example, that has a $2 million ad spend per year. We're making them over 14 million with that $2 million in ad spend, right? And so this is the reality of the market. This is what we can achieve if given enough time, right? If we tweak every single month, we tweak a little bit in the ops, a little bit in revenue generation, a little bit in ops, a little bit in revenue generation. And we do that over and over and over and over again, right? 5 years later, you literally have a business that 5 years ago was worth 5 million. Now it's worth 20 to 30 million. And that difference matters, right? It literally, like, if you sell your business right now for 5 million, you're fine. You never need to work again. Fine. But if you work for 5 more years, or you don't even need to work, just hire us or someone like us, right, to do all of this for you and get the business to 20 million, then not even your children need to ever work, or maybe not even your grandchildren, because you're looking at generational wealth. And that is what we actually help our clients build, is generational wealth. It's like not you, not the next two generations need to work. That's how protected you are. That's how big your moat, your financial moat is around your assets.
Oh my gosh, that is incredible. I think a lot of people watching this right now not only know the difference between growth and scalability, especially because of efficiency and all the background scenes. Now they're pretty much probably looking at their business and saying, you know what, I can do this. This is actually amazing knowledge. No wonder you have 100% success rate when it comes to sales. And to that point, what is that secret? Is it just exactly what you explained? Or what's the secret of literally having 100% sales? And not only that, but scaling or Xing 7 times, 6 times for your clients?
The I can tell you, the secret is something that people read about in books and hear about on YouTube nowadays, but don't implement to its fullest. And that is the principle of Kanai, or Kaizen. The Japanese call it Kaizen. It's constant and never-ending improvement, right? And so, if you as the owner can either commit to constant and never-ending improvement of yourself and of the business, or you can remove yourself enough to let someone else do that for you, one or the other, doesn't need to be both, then the business has the highest chance of success, right? Innovation. This is it. That's the secret, right? If you are the same this quarter as you were one quarter ago, so 90 days ago, you are basically behind. You're going to be, it means you're not innovating fast enough, right? You're not changing your procedures fast enough. You're not growing fast enough. You're not delivering better value. Sooner or later, a competitor will come along and outwork you, out bid you in terms of like price. They will ask for less for better service, and you will literally cease to exist. You will become obsolete, right, as a product or as a service. And so the only way to combat that, and that is actually the best way to make all of your competition irrelevant, is by you always looking in the mirror. Instead of looking at your competitors, you don't care. You look in the mirror and say, how can I give my clients a better service this year than I had last year? How can I do that more effectively with a higher profit margin this year than I had last year? Etc., etc. And you keep asking that over and over again. And after a few iterations, I do not want to minimize this. It becomes very, very difficult because you've already iterated, you've already improved and improved, 3 times, 4 times, 5 times. The seventh time, you're like, is there really something better? Like, can I actually make this better? And it becomes very difficult. The answering that question over and over again after, especially a few years of doing it, becomes difficult. But that is the secret.
And you're absolutely right, because if we look back just a few years ago when we had the COVID lockdowns, a lot of companies and businesses, they didn't adapt to the new way, right? Online, direct to consumer. And so a lot of them had to go bankrupt because they thought, in a year, the doors will be back open. In 6 months, the doors will be back open. But guess what? The doors were kind of closed for 3, 4 years. So I think that adaptability and willing to change and innovate is definitely, definitely key. So a question that a lot of business owners also pretty much think about, that I've spoken to, is should they sell 100% of their business or maybe 30%? Because a lot of them still want to have a little bit of control. It's their baby. They've had it for maybe
Mhm.
10 years, 15 years. What are your thoughts on people who don't sell 100%? They might sell 50% or 40%. Is that a good way to kind of move forward, or you're just, delaying time?
So, so there's a difference between M&A and investments. So mergers and acquisitions is, as the title of the sector suggests, you either merge one company into another. So you have a platform company and you buy add-ons, right? Let's say you have whatever, a car wash, right? And you start buying all of the car washes in Detroit, whatever. And now you make, the Detroit car wash company, right? And so instead of having one car wash, you have 100 car washes, and you make all of them more efficient because you get bulk orders, you get economies of scale, and so on. So you can literally build a huge company based on that. You just buy all of the little car wash LLCs and you merge them into one big entity. And so individually, all of the car washes in Detroit might be worth 100 million. If you get them under one banner, one company, and make them more effective, you can sell that for 300 million. And this is no exaggeration. You can literally get 3x if you manage to do this. So this is what M&A is all about, right? Just buying, building these portfolios, right? Building these platform companies with all of the add-ons, roll-ups, and so on and so forth. Investments are different. So when you sell a company, it typically falls within the realm of M&A. When you sell 30% of your company, an M&A person doesn't care. They don't want 30% of they want control. If they don't get control, why would they buy? They'll just buy your competitor and assume control, right? And so what you can get if you're willing to sell 30% of your company is an investor, right? And the investor invests in the company, not in you. Very, very important distinction. So when you sell, let's say the company is worth 10 million, just to make it simple. So you sell 100% of the company for 10 million. You, as the past owner, get $10 million into your bank account. After taxes, you keep six, or if you work with Elkridge, you keep eight. but basically, you have, or maybe even more. But basically, you have a liquidity event, right? So you get that as sort of like a distribution, right? That money goes to you. However, when you sell 30% of your company to an investor, the investor buys the shares from the company. The money goes into the LLC or into the C Corp or whatever structure you have. It goes into that. It doesn't go to you. They invest in the company for the growth of the company. It's a different conversation, right? And so if you want to have that conversation, no problem. Go to VCs, go to these companies. They're willing to give money. And part of that money can be to you sometimes in some occasions. However, in the vast majority of cases, the money is typically given to the company itself. And so your 70%, if you take their money and invest it into the company, will be worth more than the 100% was worth before, right? So let's say if you take their money and you implement it 2 years later, your company is worth 20 million. And so your 70% is now worth 14 million, right? Instead of the 10 million it was before, right? 100% was worth 10 million 2 years ago. 70% is now worth 14. So you basically made 4 million. And then you can sell them and you made 4 million with zero of your own money, by the way, because it's all investor money. The investor put in the money, they put in whatever, a few million, and then they pull out 6 million, right? Let's say they put in 2 million to help grow the company and they pull out 6 million in 2 years. So they also get an ROI. They get 4 million, you get 4 million. It's very, very fair.
That actually is a good distinction, right? If you're only selling a part of it, you're pretty much just you're bringing in investors. But if you sell the whole thing, that is pretty much a merger or pretty much selling your full business. And so, what would you say? So now that say, for example, I've sold my business, what are some financial mistakes that founders make after they sell? Like, what should they do with that new wealth? Should they maybe go and start a new business? Should they invest in other things, or should they just now enjoy life with what they, have achieved?
So a few things here. So number one, they should prepare to collect the money before the actual sale, right? And again, we in Elkridge help them set up a system where they can keep the majority of the money in a liquidity event, right? In a capital gains event, if you want to call it that, right? So they should prepare before the actual sale. We don't have enough time to go into details here, but you can Google it, you can look it up on YouTube, you can ask us, you can work with us, whatever. But basically, there are things that you should do to prepare to collect. Now, when you do collect, there's a difference between collecting, let's say, $2 million or $20 million or $200 million, right? So our recommendation on what you should do with the money depends on how much money you actually have and on your goals. So let's say you're 60 and you just sold and you sold for 2 million, right? That's the reality. You sold for 2 million, you're 60. You might just want to sit on that cash cushion, right? And so we would then recommend a very, very, stable portfolio, right? And that again, we can manage that for you, no problem. You just give us 1% of the amount, and then we get you 10 to 20% a year on that, right? So we basically get it's sort of like a 10% commission of what you make, right? And so we manage that for you, and then you get 200 grand a year, which is very good anywhere you live. Like whether you want to keep living in the US or whether you want to go to Costa Rica or Hawaii or wherever you want to go, the Dominican Republic, right? 200 grand a year will definitely keep you very happy out of the 2 million that's there. If you have 20 million, we highly, highly recommend at least a portion of that to be invested into the cash flowing businesses. So much like the one you just sold, but then you are not involved anymore. You just buy them and then other people manage, right? And so, because it's the fastest form of passive income. Of if you put 2 million into very stable return on investments, you maybe make 10 to 20%. If you buy a business, and especially if you leverage correct SBA loans or other type of loans, then you can get up to a 100% return on investment year over year, right? So you put in 2 million into that, you make 2 million a year. And this is not an exaggeration. You
Wow.
you you go from having 2 million in cash to having 2 million in passive yearly income, right? It's huge, right? So that's what we recommend. It just depends on where you're at. But if you're a seller and you work with us, as our name says, we're Elkridge Advisors. We advise, right? And
would
we
these
basically
cash
tell you.
and would these cash flow businesses be things like McDonald's, Starbucks, like very established large cap type of companies, or what type of cash flow businesses? If you have any examples, that'll be great.
Sure. So we typically recommend people buy things in the realms that they're passionate about. So, for example, we just started working with someone that wants to purchase items within the health sector, right? Because they have a background in health and so on. And so they want med spas, clinics, things of that nature. We have someone else that really likes pets. So we're looking at, vets and, those places where you take your pets to be groomed or taken care of, or daycares and so on. So we can literally build an entire portfolio around that. Many of the people we work with are completely agnostic, like they don't care. And that is the best place to be mentally, because then any deal that comes to our table that's a very good deal, we can show you, right? Hey, there's this construction company is doing 11 point, this is a true story, 11.5 million a year. It has 2 million in EBITDA, and they're willing to sell for 6 million. Amazing, let's buy it, let's just go, right? And so literally in 3 years, and so imagine you put down on that deal, maybe you put down 1 million of your own money on that deal, and then you get a loan for the other 5 million. We get you a loan, and so let's say the loan on that is, and we add an operator and we do everything. Long story short, let's say we use up a full million of that 2 million EBITDA to pay back the loan and to get the operators in and so on. But you're making 1 million a year in passive income. You turn 1 million in cash that's sitting there into 1 million in passive income. And by the way, every month where we make a payment to the loan, you're building equity. equity and equity and equity every year, right? So if you pay back half a million in the loan, that's half a million more that you have in equity. So not only are you making 1 million in passive income, you're also making half a million in equity in that business, right? So deals like this happen all the time, and the industry is not important, the deal is important.
That is actually so incredible. And you know what? I think being agnostic definitely is the way to go. But of course, people have their passions, especially like with
Yes,
the
yes, yes.
animal and so on. But I think if you're agnostic and you just are a numbers person and you're just all about that return, I think it will definitely benefit you in the long run. But it's just like as you're talking, you're building this, you're building that, and you're having all this income come into you. And I think for the average person, they don't understand how that works. But I think as you're explaining it, they're visualizing how it works because that's how I'm visualizing it. I'm seeing, okay, I'm building the equity with the bank. I'm also getting the passive income from the business that I just bought. The money that was sitting there could have still been sitting there, but now it's actually working for me. I think this is incredible. And so I think, hey, audience members, please contact Elkridge Advisors if you're looking into, getting into a business, buying a business. Because I'm gonna start looking into this because I've always wanted to build or get into businesses, but the only way we see it is through real estate agents, right? Business for sale or this. But then you're like, okay, well, if I buy it, then what? Right. So I think people just don't know those next steps. So let's take a little small pivot here. So of course, right now the world is going crazy with geopolitics, cryptocurrency. Things are changing very quick. AI. How are these I guess concepts, how are they affecting business deals currently? Because when we look across the oceans, we see some of the most richest and wealthiest countries like, Dubai, Qatar, and those kind of places, massive investments. Then we look at United States, massive investments. How is geopolitics affecting businesses? Or is geopolitics not even in the equation? And same with
So
crypto,
it's
sorry. Like, are people using crypto and is crypto being part of that world as well?
So it's very funny that you say that. We literally just came back a couple of weeks ago from Dubai. We were invited to speak at the World E-commerce Forum. We had a few speaking slots there, and we talked about AI, online retail, and supply chain. Right, all these three topics in different sessions. So it was an amazing event. There were, I believe they said 18,000 people at the event, right? It was fantastic. We really loved it. It was an honor to be invited to speak there. And so right now we are in discussions with people, investors within the Emirates that want to invest in the US. About $1 to $2 billion, right? So those are the types of conversations we're having now, because the U.S. is still a good place to invest in. I really believe you guys should choose better leaders for yourself. I'm sorry, I can't but say that. But once you guys start figuring that out for yourselves, then you can have a lot of growth from there, or you can keep having a lot of growth like you've had in years prior. So basically, with regards to the current situation, geopolitics always affects the world. The thing is that if you are small, typically you are less affected. The bigger you are, the more affected you are by these items. I always thought, I remember 10 years ago, someone was saying, that, or more than 10 years ago, I'm waiting to make a decision. I'm waiting to see who becomes president. I'm like, what does that have anything to do with your decision to buy this service? It's literally like, I was so confused at the time. Dude, it's just like a numbers game. Just work the numbers. They make sense. Let's just go. And then, no, I want to see who becomes president. Okay, fine. I always thought it's a stupid excuse. I swear. Even to this day, half of me still thinks it's a stupid excuse. At the same time, we have lost the day Trump was put into his seat. We've lost at least $500,000. That same day, the day he signed 182 papers, changing laws in the US in the
Those
first week,
executive orders,
right?
yeah.
Exactly. The executive orders, we lost like $500,000. right? My wife was so upset. It's like I would punch the guy. She was so upset. I'm like, it's fine. We'll make the money elsewhere. It's okay. But basically, they do have an effect, right? And so the bigger you are, the more it affects you. The smaller you are, typically you're less affected because I mean, you have a small coffee shop, it's like whatever happens in Iran doesn't really matter that much. It's just going to blow over and you are going to go back to, the same thing. If COVID hits, uh-oh, what happens to the coffee shop? No more coffee, no more people, right? You need to now online order, you need to do events, you need to do something else, right? Catering, etc. You need to adapt. So, long story short, everything affects everything else is the butterfly effect, if you've ever heard of it, right?
Oh yeah, it was
Um,
a
uh,
great movie too.
yes, yes, exactly. So that's the reality. Everything affects your business and the world. Just because you don't feel it, that's completely beside the point, right? Oil prices going up. Will you feel them? Will you not? Who knows? Maybe you will, maybe you won't, right? If you do feel them, some businesses will feel them significantly, like logistics companies that have a very small margin as it is, and one of their biggest prime material is the oil that they use to transport goods, right? So now all of a sudden, the price of their main material goes up by 20%, right? Huge for them, huge impact. Again, you as the local coffee shop don't really care, or the local pet service, or the local clinic, etc. At the same time, inflation goes up, you're affected, right? People expect to, pay more or to be paid more, right? Like you pay more for coffee, you pay more for whatever, the soap that you use to wash the dogs, etc., etc. So, and then you need to adapt your prices, and then people complain because they used to pay $100 to groom their dog, now it's $120. What happened? So all of these things are like a ripple effect. And geopolitics definitely has a lot to do with it. At the same time, if you keep working the principle of Kaizen, the principle of constant and never-ending improvement, you will be the least effective business affected business that you know of. Literally, it's always the same.
I mean, I think that is an amazing way of saying it, right? It's the ripple effect. It may not affect you directly at that moment, but eventually it will. And especially the bigger you are, maybe the more cities you deal with, the more states or countries you deal with, and that will definitely have some type of grip to your business. And I mean, right now, oil is the biggest issue with certain canals being closed. And if you were to give advice to a founder right now, they are stuck. They love their business. They're making money, good return on their business. They want to sell. Before calling you, what advice would you give them? Whether it's something like a principle that they should live by, something that might give them some hope. Hey, your business is good. This is what you should do next. What type of advice would you give a founder at this moment, especially in this current climate?
So what I would give, the most important principle that you can self-assess by is, if I wouldn't show up to work tomorrow, what would break? That's one of the best questions you can ask yourself.
Wow, that's a
What
really
would
good
break,
one.
right? Would customer service break? Would new client acquisition break? Would customer onboarding break? What would break if I stop showing up tomorrow? And then, or even try not showing up and see, what fires come up. And then based on those answers, work on those issues, because those are the underlying issues. If you don't know how, grab a book. We've written books. We've written the Elkridge Path. It just came out, right? Buy books, learn, watch podcasts like this one, get insights, right? From people like myself, like Patrick, like others, right? And see what you can do to implement that, or hire someone to do it for you. Again, that's always an option. But that's one of the best questions you can answer. If I wouldn't show up, or if I would stop showing up tomorrow, what would break?
That is actually an amazing question because, as we talked earlier, if everything relies on the founder or maybe one or two people and they're not around, will everything still run smoothly? Will this continue? Will this break? So I think that's actually an amazing reflective question for every business owner, whether they're trying to sell or not sell, just for growth or for scalability. And can you tell us more about the Elkridge path? I know in the last interview with Patrick, we went over it a little bit. What is your thoughts on it? Why did you write it? What is it all about? And yeah, tell us more about the book.
So in a world of ever increasing financial, economical, and diplomatic uncertainty, what will help you most is to have a moat, a financial moat, right? To be in a place where you can um, live well, you and your family basically can live well no matter what happens. So we wrote the book because most people do not understand what they need to do based on where they are on their wealth accumulation journey. So we have three parts in the book. The first part is from zero to six figures, multiple six figures. We call it 0 to 300 grand, right? Maybe your net worth is 100 grand right now, right? You're almost too small to start making real plays, real investments, right? So work more on that. So the first part helps you get to that 300 grand. Part two helps you turn multiple six figures into millions. So how do you go from being worth six figures to being worth millions, right? Becoming a millionaire, basically. And then part three is how now I'm a millionaire, right? And you would be surprised how many millionaires there are in the US. They have no idea how to go from 1 million to 10 million, other than what they've always been doing, which is real estate or stock market or what. Like they really don't know what else to do. And they don't want to keep growing at 10% a year because it will take forever to get to 10 million, right? Let's say you become a millionaire, you have whatever, 1.2 million. If you invest in the stock market, let's say you make 10% a year. So you make 120 grand, right? It will take you, what is that, 8 years to get to 2 million. And then,
Yeah.
another, you would literally die before you'd get to 10 million, right? And so it's almost an impossible feat, most people feel. That's where they're stuck. They get stuck. People get stuck in all of these three stages. They get stuck either becoming or having some financial stability, which is getting to 300 grand. We believe 300 grand is like a good number. If you have 300 grand in assets, you already feel much calmer, right? Like if you're not living paycheck to paycheck, right? You have, some real estate, you have some passive income coming in, you have stocks, you have whatever, but you have like 300 grand in net worth. You already feel a little bit okay, right? Then we turn that into millions because everyone wants to be a millionaire, but almost no one knows actually how to get there, right? And then the third challenge is the third plateau, let's call it, is, people, okay, I'm a millionaire. Now what do I do? And so we give advice there how to create generational wealth, how to, get to eight figures. So that's why we wrote it, because people hit plateaus in all of these three quadrants of where they find themselves. But if they read the book and implement those principles, then they will surpass the plateaus much easier.
I think it's those plateaus that really do kill your vision, right? Everybody does want to hit 10 million, but if you're only making 10% or 100, maybe $200,000 a year, it's going to be a long time before you get to that 10 million. And so, audience, I'm going to have all of Elkridge's advisors information in the description box, including the book. So definitely check it out if you are interested in selling your business, scaling, growing your business, or even just learning more about mergers and acquisitions, because maybe you have money and not a business, but maybe you are looking to buy or get into business. Robert, on this channel, we do have a small segment where we ask, out of the box questions. Are you up for it?
Yes.
Okay, perfect. So, first question, there's only three questions. So, first question, if Elkridge Advisors was a person, what kind of personality would it have?
What kind of personality? So there are four personality types, right? Dominant, influence, stable,
Yeah.
conscious. So I believe Elkridge would be stable because we are very people oriented. We have strong values, and so we believe that in order for me to win, you don't need to lose. So we treat both sellers and buyers equally. So we don't want the seller to be swindled into a deal that isn't fair, and we don't want buyers to pay more than the company is actually worth. So we really, really are looking what's fair market price for what you have. Fair, not the discount, not what's fair to sell right now. And so I believe that would be the personality type. We would be stable because we want to make everyone happy.
That is amazing because there's so many scams out there. And second question, what is the most random app or that you've downloaded recently or in the past? Some people have like meditation apps, some people have sunset apps. Is there like a random app that you've downloaded?
Let me check. One second. Let me go to my apps. Most used random app. I can tell you an app that I've been using for years that I believe isn't getting enough attention, but yeah, let me just say that one. So it's called interval timer.
Oh,
So I do a lot of stretches, so that I stay healthy and so on, and many other things that you would use a timer for. And it literally allows you to create presets for anything, right? You can have a preset for a morning routine, you can have a preset for a stretch, for a workout. I do those animal flow workouts as well, right? So I just turn on a preset, right, and it tells me now, do Indian squats. Now do, these lunges. Now do that, right? And it literally, I just look, and it does teet, 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 and then go, right? And then you go to the next one and to the next one. It's very, very cool. It's called interval timer on Android. I don't know if it has an iOS counterpart, but that's what I use
that's
almost on a
awesome.
daily.
Interval timer. Okay, definitely I'm going to check that one out. And last question. If you were not in business, mergers and acquisitions, what totally unrelated career would you have gone into?
Oh, I'm very sure I want to be a writer. So
Oh,
I love writing.
nice.
I really
I love
love
that.
fiction. I love reading. I love writing. No matter how busy we are, my wife and I find time to cuddle up with a good book, and read for a few hours every week. It's something that has brought us together. We both have a love of books. We don't go to any city without going in the library, right?
Oh, that's
We
good.
just go into the library, we pick up something from there, right? We read local culture, local fiction, nonfiction, etc. So that's what I would do. I would write.
I think that keeps your mind sharp and plus it keeps you informed with what's going on with reflecting on yourself and also outside yourself as well. So thank you for that, for those questions. Now, before we end off our interview, is there any last mentions, anything you want to put out there in the digital world for my audience?
Yes. I would really like to ask people to be good, be kind. Um, you know, um, at many points in time, you have, there's a like a play on words, like a pun. You have the option to um, be right or be kind, but being kind is always the right choice, right? So I think people should be much kinder, especially if you look at the hybrid war, that Russia is playing on all of Western society, right? With all of the bots, with creating this fight between Democrats and Republicans, and doing everything that they can to build as much tension and as much fighting, online and offline. I just ask people, before you leave a hateful comment, just stop yourself. Literally, just stop. Just take a breath. Do something else. Just stop hating on people. Just be kinder. Stop stealing. Stop lying. Stop. Just try to be better. Because it takes us as a society, right? Our leaders are nothing other than a reflection of who we are as a society, right? Especially in democratic countries, but even in communist countries like Russia, people like Putin were elected, at the beginning, and people wanted them, and they keep voting for them, and so on and so forth, right? They wanted a war on Ukraine, right? They wanted this, they wanted that. So there are millions of people that want bad things, and I would just suggest that if you're listening to this, just be kinder. Just make it part of your to do, to be kinder today than you were yesterday.
That is an amazing, amazing I guess, not only advice, but just life motto because right now everybody's behind a keyboard, everybody's behind a screen. They can say whatever. You're not going to be punished, right? And I think a lot of people are very brave when they say things. They do it on purpose. They try to troll you or rage bait you. And we have propaganda machines just pumping out all this propaganda, whether it's with, Eastern Europe, the Middle East, even our own home country of North America. We have so much going on, and AI fakes are just killing everything. So I think, Robert, that was such a nice message to end off this interview because being kind, it's free and it makes not only you good feel good, but it makes the society around you much, much better. So definitely thank you for that amazing message. So Robert, you have given us some wisdom, some gems, answers to questions that a lot of business owners are probably thinking like, wow, thank you for asking that, Jacob, and thank you for answering that, Robert. So we are definitely going to have you on again, you and Patrick, down the line. We would love to see how the world of business and mergers are going, what things you're up to, and I'm gonna probably get a lot of messages. And audience members, please DM Elkridge Advisors. Every short that you see on IG, I've tagged them. So if you have any questions, please message either Patrick or Robert, especially if you're someone looking into selling your business or getting into buying a business. Because at the end of the day, that is the best way to make that cash flow, that passive income, and enjoying your life, right? You don't want to work forever, right? Sometimes you want to end off, your career early so you can spend the rest of it with your family and your friends. And Robert, again, thank you for being here with me today. I'm gonna have all of Elkridge Advisors information in the description box, so audience, please check it out. I always bring you the best interviews, and make sure you like and you subscribe. And until the next time, stay ranting.